Sales are easy. It's making the call that's hard. Hi, my name is Dave Gallegos. I've spent the last 25 years in the mortgage industry and a lifetime in sales. In this show, I'll bring that experience, expertise, and the experts I've met to you with actionable advice to improve your sales. It's not magic. You just make the call. Hi, everybody. This is Dave Gallegos with another episode of Make the Call. I'm not even sure what episode. We're in the mid to upper 30s now in our episodes. And today I'm really excited. I have somebody that I've known of in the mortgage industry in Denver for a long time. This is Kim Crea. Kim, how long have you been in the business?
22 years now.
22 years. So
yeah.
about as long. So Kim and I have been in the business a long time, and that's how we're going to leave that statement. And so, so I know I've heard of Kim for years, just because we both live kind of on the same and work kind of on the same side of town. So I just reached out to her recently to have her join. You're going to learn a lot from somebody who's a veteran and done this at a high level for a really long time. So thanks for joining. I really appreciate it.
You bet. Thanks for the invite.
You're welcome. Well, so let's learn a little bit more about you before we really dig into, Make the Call was about, making the calls and doing the hard part of this business. But let's talk about you a little bit. Tell us where you're from and where you grew up and family.
Okay. So I grew up in Colorado. I grew up in Douglas County. So I'm still in the same area.
Still in Douglas County.
Same area of, where I grew up and know it and love it. And, now I've raised 3 daughters in the same area. And so, yeah, I've, been in the same area for a long time.
Right. And high school, Douglas County High School?
Douglas County High School. Go Huskies.
Go Huskies. And then college, did you go to college?
I did go to college. I went to University of Oklahoma.
Oh, that's right. We talked about this.
Yeah, Boomer Sooner.
Dad was a Sooner. So you were a Sooner. That's how that happens.
That's how that happens.
That's why I'm a Yankee fan.
Dad thought it would be a great idea.
That's funny. And so then right after college, back to Denver?
Yep, right back to Denver, and wasn't sure what I wanted to do, and just started looking for various jobs and ended up in corporate America. And
what were you doing?
Well, getting my foot in the door as an admin assistant at American Express.
Oh, cool.
Then stayed with that company that then ended up spinning off to First Data. So was then First Data, and then they bought a parent company, FFMC, that owned Western Union. I moved to the Western Union side.
Yeah, I kind of remember this.
So all told, I was there 14 plus years. So I basically grew up in corporate America.
Yeah, you did. When you left, what was your role?
I was in sales, and I don't remember, like a district account manager type of role where I owned like 17 states from Colorado West.
Uh-huh.
So I was on airplanes every other week. I was
just going to say, so you were traveling a lot.
I was traveling a lot with 3 small children.
That's hard.
Yes, it was hard on me. It was hard on my husband. It was hard on the kids.
Plus, the airport time, the amount of time that you spend just driving and waiting.
Yes.
And sitting and not working is like not productive work, but you can still work. But it's just, I hate travel for work.
It's a lot harder now than it used to be, but
DIA, right? Like, were you traveling out of Stapleton?
I used to.
It was a great airport, wasn't it?
Yes.
I miss that airport.
Leave, I think, 40 minutes before my flight and be just fine. But, things changed.
So nice. Yeah, I loved Stapleton. I once left an office. It was record time. I was less than a half an hour. I was like, I'm going to go on this flight. And I left, and you could do that. You could park really close, walk in, no security, buy your ticket, walk up, sit down. Yeah, not today. That's a whole different world.
That's right.
After 9/11 for sure. And then obviously, we drive to halfway to Kansas for the airport. Right. You get to Pena Boulevard and you're still not there, right? You feel like
still got a long ways to go.
You're still not there. And so I think you told me that you knew somebody in the mortgage business.
I met somebody through kids gymnastics.
Okay.
That she was in the mortgage business, and I was lamenting the fact that I was on airplanes all the time and missing, kids' activities. And she said, "You need to do what I do."
Right.
I work from home and, work in my pajamas, and it's a great business. And so I'm like, okay.
Sounds great, doesn't it?
I need to do that. And then I got in the business and I'm like, you're lying. It was not that easy.
No, it's not. It's a great business, but it's not easy.
That's right.
It's not easy.
If it was easy, everyone would be doing
That's
it.
right. So tell me about your first years in the business and what you were doing. You didn't just, did you jump right into I'm a loan officer, or did you get some like exposure to like processing or something like that first, or loan officer assistant work?
I jumped right into being a loan officer.
Did you?
But one of the smartest things I did, based on my mentor's recommendation, is I took a processing class, a 2-day, how to be a processor class. And I used to process all of my own loans for years.
That's a great educational experience.
Right?
Yeah.
And I'm a very detail oriented person, and I didn't know any better than to do it myself. And I really enjoyed it. And of course, learned a ton.
Well, yeah, I processed a lot of my own loans when I first started. That was a really good idea that this mentor had for you, because so many loan officers just don't have the detail oriented approach to the business, which just creates so much extra after the fact work.
Right.
Which I always say,
or surprises, which you never want to have, right?
Invest, I say, like, invest 5 to save 5. And I'm talking about invest 5 minutes up front to save 5 hours on the back, because when it's going sideways, it's 5 hours of your day
At least
to solve it.
Yeah. And not only that, but it takes your focus away from every other transaction. And you can't mentally do anything until you solve that problem.
Same. So that's such good advice, Kim. That's such good advice, because I was on a call right before this with one of my LOs, and it's that same thing. It's like, dude, it just doesn't have to be like this. And it's this, these things are always going to have to be addressed. And if we want to write good loans, and it isn't enough to do a loan and close it. We have to close it, and it has to pay, and it has to be saleable, and all that stuff.
Right.
All that stuff really matters. And so many loan officers, I think this is a missed skill set, because not only does it create an amazing experience for your customer, which I still think, curious to know what you think, that this industry too often treats loan officers like we're the customers. But we're not the customers. The customer is the customer.
Right.
If the customer's not happy, if the customer's really happy with the process, that means the referral partner is really happy too. And if the customer and the referral partner are happy, we'll be plenty happy, right?
Of course.
If those two guys aren't happy, if the customer's not happy and the loan is like, then we're unhappy, right?
Right.
And so you can have a really happy loan officer with horrible reviews. They're jacking up the pipeline because they submit garbage, and it just jacks up everything. So this is some really good advice from somebody who's been in the business for a really long time, and just like me, and like, don't do that to your company. Don't do that to your customer. Right.
Right. Right.
Because it really is about taking care of, like, giving the customer a better experience. I think the biggest challenge is the loan officers don't like to ask for things they think that will bother the customer. I always feel like that's the issue, is like, why can't you just tell them, here's what it's going to take?
Right, right, exactly. I mean, take time to understand where the clients are coming from and let them know what the process looks like.
Right.
There's a lot of mortgage companies out there that like to say and promote that, push a button, you get a mortgage. And yes, we want to make it feel smooth and easy, but there's a lot more to it than that. And we need to make sure that clients understand that this is a serious business. So we need to get the information up front, and we got to get it right.
It has to be right. It's not going to change. Yeah. Yeah. When the push button get mortgage thing came out, it's like, well, okay, I can have you push a button, and I can tell you that based on the information you submitted, or even based on like an automated process of collecting your income documentation through a platform like Plaid or one of those, and the work number, getting your verifications of employment done, stuff like that, getting your bank statements, but a live person is still going to have to look.
Right.
There isn't a machine yet that is signing off on your bank statements or your income statements. That's not happening yet. And the companies that are promoting that like it's happening, is like, no, there's an army in the Philippines there's an army of underwriters in the Philippines that are reading these documents. That's how that's working, right?
And so sometimes those documents are wrong.
And sometimes they are
incomplete.
Wrong. Yeah.
So
very incomplete. Like most customers, wouldn't you agree? They don't know exactly how much money they make. I mean, unless they're on a base salary, here's how much I made.
Right. And there's nothing else to it.
Right.
But when you need the bonus income or overtime or commission or whatever else there is, you need the per diem or car allowance. That's not going to show up on the work number potentially and accurately. So you need the human being
So what's your approach? Like, how do you, I would love to hear from you, that somebody who's been doing it at a high level for a long time, is what is your approach with the customer? Because I think that's something that, especially if you're a newer loan officer, I think that's something that you can really benefit from. Like, I just feel so bad because I feel like the customer doesn't like have to keep, and then, you hate going back and going, oh, you know what else I need? That's the worst.
Right.
Because the customers hate that, by the way. So
Right.
what is your approach? Like, what's your conversation like with that customer to prep them for what I used to say is like, well, I can, like, if you go to the dentist, they can pull your tooth out without any pain medication or Novocaine, or they can do this pre-work and then give you a little shot and let that take, and then pull the tooth out and you won't even feel it.
Right.
It's you don't want to tell somebody that getting a mortgage is that painful or that extraction inducing, but what is your approach to that and your conversation? What's that like?
I ask a lot of questions, and again, take time to understand where the clients are coming from. When was the last mortgage they got? And what experience was that like? And, again, understand where they're coming from and then ask questions about their pay structure. And, once I understand what that looks like and get their answers and their feedback, then I know what to ask for. And I let them know that this is why I'm asking.
Do you get pushback?
Never.
Yeah.
Never.
That was never the hardest part. Like every now and then somebody's like, why do you guys need all this stuff? It's like, dude, I wish I didn't need any of it. If this was up to me, I'd give you the loan. But there's these agencies and there's all of this stuff. It's like,
right.
It's a much more complicated process. I'm doing everything I can to make it as simple as possible. And I wouldn't ask you for it if I didn't need it. But right. I always want you to be clear to close as fast as I can so that you can quit thinking about your mortgage and you're getting the house, you're getting the loan, what it's going to look like as soon as possible in the process.
Right. I want you to focus on your home inspection and your moving. There's a lot of pieces you have to focus on. I don't want this to be a stress.
I usually found that once you explain the why, people are like, okay, that makes sense.
Right.
It's us. We're the problem.
Right. Because set expectations.
That's right.
And you're fine.
That's right. So we had when TRID came out, we were looking at our entire sales funnel and workflow process. And we're trying to figure out like, how can we shave time off of this so that we can be clear to close even faster? And I was like, you know what? What if we quit telling the customer we wanted the application back within 72 hours? What if we started to tell them we want the application back in 24 hours? What would happen? And every customer was like, oh yeah, okay. Every customer said, okay. So we're like, it's us. We're the ones that set the wrong expectation. We don't tell them, it's like, I need it back in 24 hours. Because if you say I need it back in 72 hours, well, I got 3 days.
Right.
I don't have 1 day. It's like, no, I need it back in 24 hours. Like, oh, we got to do this today.
Right.
And like, it's us. It's us.
Yeah. Whatever we ask for, generally speaking, they'll comply with,
Exactly right. Yeah. Well, you don't go to the dentist, using the dentist analogy again, you don't go to the dentist and tell them how they're going to clean your teeth.
Right.
They sit you down.
We are the professionals.
Yeah, exactly. So just like you got to act like, I think that's part of it. Well, that's great advice especially for a newer person. So talk about, because, I'm sure you've got a long list of really satisfied past clients. I mean, that's where a lot of, if you do this business the right way, you get a lot of repeat and referral business from that database. Talk about the relationship, how you stay in touch and how you maintain those relationships, how you continue to add value, because client retention is such a big deal, especially with all the press that we're hearing about Rocketbot, Mr. Cooper, and the servicing portfolios that they're getting. I still believe that our differentiator is our personal relationship with the client. But how have you done that over the years, and how are you approaching it going forward?
I have a few different marketing pieces that I'll do. I send personal birthday cards to every past client and current prospect. And then
because we know their birthday, right?
Right. We know their birthday. So yeah.
How do you not do that since we're in this business?
Exactly.
Right? Yeah.
So send personal birthday cards. That would be a big thing. Just reaching out on a regular basis, 1 year anniversary, maybe 90-day anniversary. If they're interested in an annual review, you bet. So just reaching out on a regular basis, folks that are interested in maybe refinances, right? Mm-hmm. Especially the last few years, what kind of loans they may have and what they may be interested in. So, the past few weeks, lots of information going out in the media about interest rates. So I'm just reaching out proactively and saying, hey, you may be hearing this.
Right.
Here's what's really happening.
Right.
Here's how the numbers look. Just staying in touch with you, and trying to stay ahead of the game.
Have you had clients, because we've seen some of this, have you had clients reach out to you like, hey, I just got this email from my servicer. Have you gotten some of that?
Absolutely.
Yeah. Some of it looks
Yeah.
pretty predatory-ish with the rates that they're being offered
Right.
without fully disclosing $25,000 worth of discount points,
Right.
which is kind of disturbing. I'm trying to figure out what they're hoping to accomplish here, because I would certainly hate to bury a customer with another 25 and then not with hardly any payment savings, right? Because we had a customer that actually got shown like, and here's your new monthly payment. It's like, well, my rate's dropping a lot. Why am I only saving $50 or
Right.
$75? It's
Right.
like, well, because your balance just went up 40 grand. And
Yeah.
like,
It's
this isn't helping.
yeah, and unfortunately, a lot of them are burying the cost under origination instead of discount because consumers have become somewhat savvy
About the discount.
about discount points. So they're looking for and asking about discount, but they're not looking for or understanding origination.
Right.
And so they hear the rate, they don't see or pay attention to that loan balance going up, and they jump at it. And yeah, servicers are wanting to retain the portfolio they have. And it feels like they've staffed up significantly in the last few years and are pounding the phones.
Kind of feels like too, they're using a lot of like somebody's programmed, because some of the emails are pretty stupid. Like they're like I just described, like your balance is going up 40 grand. Like, what do you like? That doesn't help you.
I'm sure they've used AI to build some,
I think so too.
automated emails that pop out.
I'm wondering how much automated AI, I wonder how much AI is being used on the phone call. Like if it's not really, I wonder how much of it's a bot making that call, because I had to call, my dad got a new medical card and I had to like activate it yesterday. I got on the phone with somebody who's not a human being, sounded like a human being, but clearly wasn't a human being. And I was like, I wonder if this is the future of customer service in this country. And that's I'm wondering if that's what's happening, which is, again, all the more reason why, especially with something as important and as sensitive as a mortgage, all the more reason why we need to work really hard to maintain that personal relationship.
Sure. Yeah. I mean, I have a particular client that just closed a refinance for. He said his current servicer had been reaching out 2 to 3 times a day via phone call. So to your point, were they all human beings? I don't know, because if they are all human beings and they're all different names, how many people do they have on staff that are making these phone calls?
Yeah, see, I got to believe
there's something happening there that just doesn't feel right. It's not passing the sniff test. And luckily this client is savvy enough to say, yeah, it doesn't feel right. I'm sticking with you.
I think it's incumbent upon us to make sure they know what's going on too, because that can easily be taken advantage of, and something that sounds too good to be true usually is. But if it sounds really good, there's some people who are like, well, yeah, why wouldn't I do this?
Right. And he was being offered a significantly lower rate at, quote, no discount points.
Wow.
And then when I, realized and was finding out that, oh, they're burying it under origination points, I let him know. And he's like, okay.
Yeah. Wow. I did a thing with, I can pick on them. I don't know anybody who works there, better.com. I just went online to see, because it's a very slick process. Like if you go to better.com's website, I'm like, look, it's a very slick process. I never talked to a human being. According to them, I was pre-approved for my loan. Like they sent me a letter. But if you read the letter, nothing about the letter said I was pre-approved. But they called it a pre-approval letter.
Right.
But if you read the letter, it's like, I'm not pre-approved. Like if I read it and you read it, it's like, this is not a pre-approval. It actually says this in the letter, but the email they sent was, here's your pre-approval.
Right.
And so you would think stuff like that shouldn't be legal. And then every day, if not more than once or twice a day, I'm still in their loop. So I keep getting an email every day with what their current rate is I can lock in at. And it's always with $17,000, $18,000, $20,000 worth of discount points.
That's insane.
It's like, well, who would do that?
Right. Unfortunately, there's a lot of companies that have turned us into a commodity, and or at least for a lot of consumers, in their minds, we are a commodity, and they don't understand, again, like we said at the beginning, there's a lot more to this business and this industry.
I think what you just said is a really good marketing piece. Like that we should be telling our customers, you are not a commodity, and you're being treated like one by your servicer. You are not a commodity.
Right.
Getting a mortgage, you shouldn't be doing this with a bot. You shouldn't be doing this is hundreds of thousands of dollars. You can bury yourself in debt the wrong way. There's so many ways to do this without, that was my story when I got in the business. I got like, man, I got 3 mortgages before I ever learned the mortgage business. And I paid way too much all 3 times because nobody explained to me how it worked. And so I've always said this about mortgages is like, I think it's too big of a deal and you don't do it frequently enough for it to ever be as automated as like, yeah, I can buy a plane ticket on my phone,
Right.
which is really nice how easy that is to do. But I don't fly like you were flying, but I fly frequently enough. There's like, it doesn't bother me at all. It's like, I don't do 3 mortgages or 5 mortgages or 10 mortgages a year. I don't do that. Nobody does
Right.
that. And the amount of change between your last mortgage 3 years ago and today is astounding.
Right.
Right. I mean, the technology changes, the rule changes.
So yeah, I mean, it's up to us to educate the consumer, and I will bring up all the initial phone calls with clients. I'm sure you've been on the Google, you've been researching, let me know what you're seeing, what you're hearing, who you're talking to, so I can, speak to what you're hearing and seeing, because they get a lot of bad information.
Well, yeah, it's like I had a doctor say this to me once. It's like, did you talk to Dr. Google? So it's like, well, that's funny. It's like,
yeah, I just like to call it the Google. I know you're checking the Google.
The Google, that's
you're putting
funny.
it out on
that's
the
good.
line.
Yeah, that's funny. What's the Google telling you?
That's right. That's what I ask them.
That's funny. That's funny.
Because it makes it a little lighthearted,
Yeah.
And people chuckle and say, okay, yeah, here's what I was here. Here's what I saw. Here's what I found, whatever. And then I can go, okay, great. Let's start with that.
And I actually was talking to a marketing guy here about this. The fact that the customer has become so attuned to the rate, the rate. It's funny how when I get this email from Better, it's got 5 7/8 today. I got 5 7/8. Like we're not even close to that. I mean, I guess we can do 5 7/8. I would never recommend a 5 7/8 interest rate for the cost associated with it for any of my clients. So, but they show me that rate, and all I can think of is like, it must work. It must work.
It absolutely
it
does.
must work because they keep doing it, even though that's the first thing they show me is the rate. The second line, they show me a principal and interest payment on the rate based on a loan amount that I can't remember I plugged in now. And then they show me the points. And then they show me the APR. And no one, and I mean no one knows what that APR is. No one gets that.
Right.
And that's why, we're supposed to disclose it. Obviously, by law, we have to disclose it, but I barely understand it. And so and I've been doing this for 29 years or something. So it's all the rules that are being followed, but they're being manipulated so that just focus on
it's very deceptive.
It's very deceptive.
Yeah. I mean, they should get in trouble for deceptive advertising, which my guess is if anyone complained to the CFPB, they would get in trouble.
Right.
But unless someone takes the time to go make that complaint, no one's paying attention.
Well, talk about always some of the best stories are when you got in the business, besides the freedom, which is amazing, and the income potential, which is also amazing. Talk about, I don't know, for me, when I started doing this, I was like, wow, this really makes a difference for people. And I never sold anything like that before. Everything else that I sold, I always say is like, everything that I sold before that was good for me, because I got a commission check. But this is the first time I sold something where it made a difference for the people that I was selling it to. And it was really gratifying. I'm sure you have amazing stories. I'd love to have you share maybe 1 or 2 of those stories of people that you helped over the years that just like maybe you were crying a little bit when they were crying at the closing table.
Yeah, absolutely. And I love what I do. I love going to the closings and seeing the happiness and joy on people's faces when they're getting their home. And yes, especially the first time home buyers, absolutely. Lots of various stories. And I didn't come prepared with any particular stories. I do have one in particular that stands out from the last few years. I had a veteran that had been through some medical issues and some tough times and had a really low credit score, really low. And so I worked with her to build her credit score back up and got her to a place that now we can get your loan approved. She ended up working with a builder, but the builder couldn't get the loan done. So then she came back to me, and it was a really challenging loan to get done, but we were able to get it done. And, literally crying at the closing table because she was just so excited to have her dream home. And she worked really hard at, every task I gave her,
Should do it.
she did it. And, within minutes, okay, you told me to do this, here's the receipt or whatever, right? She did everything I told her to do. And
so fun.
yeah. So
I guess you probably still know her. Yeah. You guys
absolutely stay in touch.
Yeah.
Yeah.
Yeah. That's awesome. Yeah. Cause those are the stories that you're like, wow, I really changed. And when you see what a big deal it is, I still believe home ownership. I still believe in the American dream, home ownership, and what a difference it makes in people's lives financially for their future and everything else. But the other part of it is the satisfaction and the pride that they have when they get that done. Because like it looked hopeless, especially if it looks hopeless when you're starting off, like my credit's terrible. I can't do this. And I don't know how this I don't think I can. And when you get somebody who will listen to you and go like, if I will help you do this. If you do what I tell you, you can do this.
Right.
Because we have that ability. Like we can coach somebody through that process. And when they do it, it's just like a blast. Like it's so fun. Like it's
life changing. So yeah, it feels great. And I love being a part of it.
And you give your career. That's the other thing I said is like, it's the first time I felt like I had a purpose in my career.
Yeah.
Cause I didn't before. It was just like, I just got to sell stuff to make money.
Yeah. I sold the corporate widget. And
right.
Yeah.
That's cool. That's awesome. So in mortgage lending, we have this amazing business where we get to, the best thing about the business is our time is our own. And the hardest thing about this business is our time is our own.
Right.
Right. And so talk about the reason the podcast is called Make the Call. This is for real estate agents too, because it applies to everybody in sales. That's straight commission and self-sourcing. How do you manage that discipline? Because that's the hard part. Like, how do you hold yourself accountable to that same type of standard? It's interesting to me that if you had a job, you would do that for somebody else for this check that you and I wouldn't be willing to work for today. And yet today we have this potential to make so much more, but we're not going to hold ourselves to those same standards. So talk about how you've addressed that over the years, because it's very common. Like everybody's like, yeah, that's the hard part is like, I can golf today if I want to. So talk about that. I don't know if you're a golfer, but
not really.
I'm not either,
but just in general. Yeah. I mean, you can go do whatever, right? You could go read a book all day if that's your thing versus, as I call it, butt in the chair and grinding.
Right.
And I've just never had an issue with it. I'm driven, growing up in corporate America, I worked long hours.
Well, you had to work, right?
Yeah. And that's just who I am. So I still get up and I get ready. And even if I'm working from home, I am in my home office.
You probably are. You seem like somebody who's not working in her pajamas ever. I mean, unless it's like really
once in a very great while, but yeah, you're right. I get up and
because you get dressed because you're like, I'm working now. Like
yes.
I put on the uniform.
Yes.
Right.
Exactly.
Yeah.
So yeah, I am, in my chair and I am working just as though I was, in the office and, off to work and, making phone calls and working on the database and, updating files and making sure everything's moving along as it should be. Right. That's what you need to do if you want to reach your goals. And, I guess maybe for some folks, it starts with the goal setting and, then what your daily tasks are. And some people need that structure to keep them on task. Right. I don't really need it quite to that extent because I'm just going to do it.
Right.
But
yeah, it is interesting when you see people, whenever I hear people in this space that I talk about, it's like, that's really hard. It's like, well, okay. So if we look at your calendar, let's look at your calendar. Let's see what's in your calendar. And then you just look in their calendars, like there's nothing in their calendar. It's like, you don't have any responsibility here. Like there's nothing that you're holding yourself accountable to. So I just watched a really good podcast. I'll send it to you with Brian. You remember Brian Buffini?
Oh yeah.
The real estate trainer, dude.
Oh yeah. That was after my processing class. That was the very next thing I did.
Did you?
Was a Brian Buffini seminar.
I signed up.
That was brilliant.
I signed up for their coaching. Did you sign up for their coaching?
No, I never did that.
I got coached for them with them for a little bit.
Okay.
And then I found mortgage coaching. I went to Todd Duncan and
okay.
And he said we surveyed because his whole thing is like, if I can just get loan officers and real estate agents to prospect for 2 hours a day, every day, 2 hours a day, just 2 hours, you just make $400,000, just 2 hours.
I mean, I still send out thank you cards. If I get a referral, and that's the next thing I'm doing is doing a thank you card.
Yeah. Good for you. Do you do you still do 5 notes a day? because that's his thing. 5 notes a day.
Yeah, I'm not always good at 5 notes a day, but I do
5 notes is
have.
hard.
It is hard, but and you can get sidetracked really easily. As soon as you get busy in the business, I get sidetracked from that. But that is a task that in the very first thing in the morning, my tasks are the birthday cards and the thank you cards.
The thing about this business that's hard is that the really powerful things like 5 notes a day, it's boring and it's mundane. And but one of the things he said on this podcast was you have to do the boring and the mundane things.
Yeah.
They're not exciting. They're boring. But if you're consistent with it, the guys that are making the most, they're super consistent with the boring stuff. And I think that's probably a really good way to look at it. So what he said was they surveyed, I don't know what the number was, hundreds of thousands of real estate agents. And they asked them what their top 3 daily activities are. He goes, and he's in the interview. He's like, you know what they were? You know what the number one was? He goes, I don't know. He goes, running errands. Running errands is the number one activity of a real estate agent. It's like, oh my God. And so I saw that part of the post. I actually reposted it on Facebook because it works for loan officers too. It was running errands, scrolling through social media, and I can't remember what the third one was, but it wasn't work. And it was such a basic thing. And it's like, and what he advocated in that podcast was, because we have this work from home thing is probably the worst thing that happened for real estate agents and loan officers, is because now they don't even have to get dressed for work.
Right.
They can sit at home and they can and they're not even getting dressed. And he's like, you want to work at home? That's fine. But get up, take a shower, get dressed for work and sit down and work, like go back to work. And it's like something that in this business, whether they were working from home or not, has always been a challenge.
Right. Yeah. I'm lucky enough that I have a home office, like separate room home office. And so I go into my home office. And that's where I am. I'm not in the family room by the TV. I'm not in the dining room. Yes.
Are they with you in the room?
Sometimes.
See, you're clearly more disciplined than I am. I'll be the first to admit I can't work from home because I'm too easily distracted with stuff in the house, and the dogs won't leave me alone because I love my dogs and they know it. And so they're like, come on, we want to play. And so
now I have cats, and sometimes my cat is laying across my lap and I'm still typing away on the keyboard. So
my daughter's she's a loan officer here, and she has a cat. She not anymore, but she had a cat. And the cat would just like walk across the keyboard in a Zoom meeting. And so, but yeah, I can't do the home thing. I'm just not. But that's good for you. I have to come to work.
But you know yourself. And so that's what you take care of it. The folks that aren't doing it, like you either need to plug in or go find another job, because, you'll never make it if you're not going to plug in.
I always say this is a really hard job if you can't be disciplined about your time, because when you're in a straight commission sales job like ours, not selling is very depressing and it's really hard on you personally. It's really hard on your self-esteem and hard on your self-confidence. And you've got to have a lot of confidence and self-esteem in this business. You have to believe in yourself. You have to believe in your value. And if you're not selling, it's really hard to have self-esteem and self-confidence. And so if you're not closing deals, so that's the toughest thing for new people, I think, is when they first get in the business, is like, you got to power through the beginning times of this business and stay the course for at least 6 months, like going crazy, like you're closing 30 loans a month. You got to work like that and you'll be fine. But if you don't, you're not going to make it.
Right.
Yeah. Have you mentored any people? Have you brought people into the business at all that worked under you that you helped mentor as they got going? And how did you guide them? I'm sure a lot of people with your experience and your success have come to you like, Kim, how do you do this? And how do you do that? Like, have you had a lot of that in your career?
Yeah. I mean, over the years, there's definitely been a lot of sharing of information, how do you handle this? Or, and then just you come up with good ideas, from others. And, I work with some really seasoned folks and some other folks that are not as seasoned. And, but definitely idea sharing is important. And that's one reason being in the office can be really important. So working from home is great. Even, as good as I am about being, in my office and working hard, being in the office is great because the energy you're sharing and the ideas are incredible. Like, hey, I'm having a tough time figuring out this deal, or how do you handle this? That
I used to love just hearing another seasoned loan officer speak to a customer on the phone. just his side of the
Sure.
I didn't have to hear the other side of the just to hear his side of the conversation is like, okay, what were they saying to you? Like, what were you saying? Like, that was really good. I want to use that, right? Because that's how I learned. I listened to other people that were seasoned. It's like, that's really good. That's a great, well, I want to have to use that. And so I do think that's lost if you're working.
Yeah. Yeah. If you're working from home. I mean, when I first got in the business, I was working from home and I wasn't meeting anybody in the industry hardly. I would go to my Smedra meetings on Friday mornings and that was it. And so it was very difficult to meet people or share ideas or just the energy. So it wasn't until I was working for a company that I was in-house and in the office every day that it started getting really good.
Talk about the other part of this business that especially for newer people, experienced people, because we're living through. You and I would agree the last 2.5 years been the toughest 2.5 years of my time in the industry. And I don't know, I wasn't doing this during the teens interest rates. I've never experienced that. The amount of business slowdown that was, by comparison, because we had such amazing 20 and 21, this feels even more painful. What has been your approach when it comes to your referral partner relationships and getting new referral partner relationships? Because that's always, I believe that no matter what you do, if you're still in this business, you always need more referral partners.
Right.
And the 5 that you think are golden today, there's a very high probability they won't be golden 2, 3, 4 years from now. And only because their lives are going to change. Right. Not necessarily you're not doing their loans anymore or they're helping their customers. They're not doing the business anymore. Right. So talk about that.
Yeah, I mean, agents, even the really good ones, they'll have a really good year and then a really bad year. And then, and their business is cyclical.
For sure.
So to your point, having more relationships so that helps balance out the ups and downs of their side. The last 2.5, I mean, for me, I would say May of 22 is when the light switch went off and, business just disappeared. It obviously has been very difficult.
For the agents too.
Yeah. Yeah. So just staying in touch on a regular basis and, always asking questions about what are they seeing on their side? What are they hearing? What are the pain points? What do they need to help support them and their business? And, you can tell, to your point about who's working and who isn't.
Yeah. You can't tell.
Yeah. They're like, well, I don't know. I haven't talked to anyone in a while. Well, you're not going to last very long. Yeah. Staying in touch and, it's making the call, right?
Yeah.
Constantly making calls.
That's
and just staying in touch, trying to, keep the face-to-face happening on a regular basis.
Are you familiar with ninja selling?
Of course.
So I was struck by, because I haven't really thought about Brian Buffini in a long time. I just hadn't. And then I'm watching this podcast. Like, first of all, you love the way the guy sounds because he's got that Irish brogue.
Right.
I love listening to him talk because he's funny too. He's always been really kind of a comedian. But Larry Kendall's teachings in ninja selling and Brian Buffini's teachings, they're almost the same, just a different approach.
There's a lot of overlap.
A lot of overlap. Sure. And what they're both talking about is this simple concept of having 10 conversations a day. You've got to have 10 conversations a day. You got to have 2 face-to-faces, 5 face-to-face meetings a week, or whatever the number is, right? Like I think it's 15 face-to-faces, which can be Zoom now, or 5 break breads, they call them in mortgage world, right? And ninja selling, it's crystal clear. In the core coaching, it's crystal clear. In Brian Buffini's teaching, it's crystal clear. It's all about how much conversations are we going to have? And we do a sales call here every Thursday. And we had, you know who Amir Syed is, the Go coaching guy?
I do not.
Anyway, he was on our call and he just said something to the loan officers. He's like, guys, the next time you're flying into Denver, just look out the window when you're getting close and look at all those houses. You don't need that many of them. There's a lot of houses and you just don't need. So when the Scotsman Guide numbers came out, we were very fortunate that we had, out of 8 loan officers that work here, we had 4 loan officers in the Scotsman's Guide. But I took the whole list. There's 157 loan officers on the list of the whole list of the guys in Colorado that were in the Scotsman's Guide. And I added up, they did 16,700 transactions, about 7.7 billion in production. And what I told all these guys is like, and then I go into this other software I have, and there's like $70 billion worth of first mortgages closed in Colorado last year. And so, and I don't know what the units were because I didn't have that, but I had the volume. And so I just said, the thing about all the production that those 157 people did is that those loans were going to happen no matter what, whether the loan officer who did them or that customer was still going to get the loan. And what that means is we sell a product. We don't really sell it, right? We're really providing the product that the customer already needs. So we're not having to, like, when I was selling, I think of like selling siding, like being a siding salesman, like the movie Tin Man, like you have to talk somebody into doing something they didn't want to do when they woke up today. We never do that in mortgage.
Right.
We're only helping people that need they'll take a better mortgage if a better one's available. That's what we sell. And if you don't own a home, you always want people who don't own a home want to own a home, right? And if they have a nice home and they want to move up, they want a nicer home, right? And so we sell that kind of product. So these loans are happening no matter what, whether I talk to them or not. So it does just come down to more relationships.
Yeah. I mean, like you said, making the call, getting in front of people, having the conversations, and the more the better, because you're going to have clients that, will go down the street for a little bit lower rate, probably not going to get the service or the advice. I've definitely had some of that recently with folks that they got into a mortgage that I don't think was in their best interest, but they thought that it was a better deal.
Right.
So, there's only so much you can do, but, just constantly having, reaching out to folks and, and having their best interest in mind.
Right.
And that'll resonate.
I think so. When you do that's the customers know. I mean, I always, because that's the cool thing about this business is that you do that first time home buyer that you help the gal that you helped. I was still doing loans long enough where the kids of the people I had done loans for were sending their kids to me.
Yeah.
Or the customers were sending their kids to me. Is like going, this is an unbelievable business.
Yeah.
Right. When you're helping the child of the parents, like, yeah, my dad said I have to use you. So it's like, all right, then.
Fantastic.
That's a great business. That's what's fun about the business. That's where the gratification comes in. Well, what else? What other advice would you have for like that, maybe the struggling loan officer or the newer loan officer in the business right now? Like, yeah, it's tougher time. It's harder. There's fewer deals to go around, but there's still a lot of deals happening all the time, as is evidenced by that Scotsman's Guide list and the amount of loans. Like, what would your advice be to somebody? And same thing on the real estate side. What kind of advice are you? I don't know if it's advice so much as it is, as like mentoring or guidance. Like, what can I do to help you? What kind of advice how are you giving out? Is this the same thing that we're just talking about? All the same
sort
stuff?
of. I mean, we know that, the good stuff comes out of the difficult times. And these are the difficult times, right? Like when you're getting in shape, you don't just one day wake up and you're in shape, right?
Nope.
You got to put in a lot of blood, sweat, and tears. And that's what we're doing right now, right?
Right.
So we've got to just work on the relationships, maintaining or building relationships. And, what does that mean? Like, okay, well, what do you need to help support you, Mr. or Miss Realtor? What do you need in your world? Is there anything I can do to help get your calendar on track or to help keep you accountable? Anything like that, just trying to meet them where they're at. So just
that's great. That's great. Like I would guess that's really resonates with a lot of the real estate agents because I don't think they're very structured because one transaction is worth so much more than one transaction for us. Right.
Yeah. So, staying on track for them can be very difficult, especially if I see a huge difference between folks that have had like corporate America experience, because now you've got that structure and that business side that if you haven't had that, I see a huge difference in how people operate. So the folks that haven't, they need more of that structure and understanding of, you've got to automate some marketing things so that when you get busy, that'll still happen. And, you've got to make sure you put things in place that when you get busy, you can still maintain that. Because at some point, if you keep up on all this, you will get busy.
Yeah, for sure. Oh, yeah. There's too much evidence that there's an undersupply of housing, right? So we know that there's more household formations than there are new homes being built and new housing units being built. And that's going to continue for some time. So the opportunities aren't going away. America's population is still projected to grow through the end of the century, almost to the end of the century now. It's like, if that's true, where are they going to live? Where are they going to live? That's where I say it's like, this is a great business to be in. And it makes a lot of sense to own real estate, right?
Yeah, absolutely.
Still comes down to the calendar, doesn't it? Like at the end of the day, if like, let's bust open your calendar and let's see what you're doing.
Yeah.
Right. Because
Yeah.
that's really the conversation that we ought to be having more frequently is like, what's in your calendar and are you honoring it? Where that's one of the areas that I think is really important is use the example of the dentist again. If I have a dentist appointment, I show up on time for the dentist appointment. I don't miss that dentist appointment. If I have an appointment with a real estate agent or with a client, I show up on time. I have to, right? Like as I'm a loan officer, I'm not going to get the loan if I'm late. If I'm late for a real estate agent appointment, I'm like probably not going to get another opportunity. Right. And so, but if I schedule an appointment in my calendar for prospecting activity, I should honor it the same way. And that's, I think, what Brian Buffini's talking about with when it comes to making your calls is just 2 hours a day, man. Just 2 hours a day of prospecting.
Well, the two words that you just said, which I think are absolutely key, is show up.
Right.
Show up and do the work.
Do the work.
Right? If you want to get in shape, you got to show up and do the work.
Yeah.
If you want to be successful in business, whatever business it is, show up and do the work.
Show up and do the work. Yeah. I've always said in this business, if you do the work, it always works.
Yeah.
It's never not worked.
Right. It'll work out. I mean, that doesn't mean it's going to work out tomorrow or next week, but it will come.
Yeah. It always works.
Yeah.
This is great. This is exactly what I expected. For somebody who's been in the business this long, keep saying it like you're old. I hope you don't take it that way because I'm older than you. So I already know I'm older than you. So you can't, but we've both been doing this for a long time. And so it's just good to hear. I would think it would be good to hear like, what are people who've been doing this for a long time? What are they thinking? What are they saying? Cause I've seen 2000, I got in the business in late 97. So I saw 9/11, I saw the mortgage meltdown, and then I saw what happened in the teens, which was, kind of bumpy. And then I saw the COVID and then the post-COVID experience. And it's been, there's always been, I've heard this, I don't know if it's true in mortgage, but in every 10-year business cycle, you have 2 amazing years, you have 2 awful years, and then 6 years that are okay. Right. We're not quite through the 2 awful years yet. We're maybe a little bit longer than it's.
I was going to say we're at 3, but now. COVID has changed the rules.
It has changed the rules.
So I think that used to be the rule. Yeah. And now COVID has changed the rules. So we don't know the timeline, but this will pass.
The amazing 2 years was really like an amazing 4 years crammed into 2.
Yes. So therefore, if we had an amazing 4 years, how many bad years do we have to have? I don't know. I'm hoping 3 is it, but
it's starting to feel like it. I mean, we're starting to see some consistent levels of activity, and it feels like such a wild card with the interest rates. But I still believe this. Look, if you're watching interest rates, if you're a loan officer and all you're doing is paying attention to what's going on with interest rates, you're missing the boat.
Right. We have no control over that.
None.
And as you pointed out earlier, people are still going to buy homes. Right. And
you have 3 kids in a 2-bedroom house, you're moving.
Yeah.
People
are finally to the place where they're sick and tired of holding on to that 3% rate that they've not wanted to let go of. And they don't like it, but they're busting at the seams or they're getting divorced or something's some sort of life event is happening. And they've got to move, and they're just done.
And then, I mean, we can't be in the 8s, I don't think, because the psychological. You probably agree. The psychology of the difference between 5 and 7, 8 and 6 is amazing. Like people like 6, and it's like, dude, it's like an 8th higher. It's like $20. Yeah. It's not that big a deal, but it's like I can't believe 6. And the same thing happens the other way when you're going down. When you go from 6 to 5 and 7, it's like I got 5. It's like, well, 6. So it's pretty much 6.
But it's like the cocktail type talk, right?
Exactly right.
They love the idea that they can say it starts with a 5.
Yeah. I always say, do me a favor. Don't ever ask your friends what interest rate they have because they all don't know and they're going to lie. Not because they're liars, but because they don't really know and they don't want to tell you it's too high because then they look stupid.
And they don't want to tell you they don't know.
They don't want to tell you they don't know. Yeah. So I was like, I always thought it's like your friends don't know what interest rate they have. I promise you. And if you unless they're one of those guys, like I guess 1 in 25 people might know it only because they just got it. But after a couple of months, they're like, I don't know what you know what our rate is? Like, I don't know. I don't know what the rates are on most of, we have several products. Like, I don't know what the rate, it doesn't matter. It's like, that's the payment. Because it really isn't the rate, isn't it? It's just the monthly payment budget. It's not the interest rate. It's what's your monthly payment budget.
Right.
Matter. always.
Right.
It's just fun to listen to the wisdom that you brought to this business. And it's important, I think, to remember, I guess what we're all talking about here is if you want to stay in this business, you got to make more calls and have more conversations. The loan officer with the most friends always going to win, right? At the end of the day. Same with the real estate agents.
And the people who show up and do the work.
That's it.
Right?
Show up and do the work. There it is.
Show up.
There it is. Show up and do the work.
Show up and do the work.
This has been Kim Crea. This has been great information, and that's as solid as it gets. This has been another episode of Make the Call. Thank you for joining and listening. I hope you appreciated it and you liked it. Please give us a like and a rating and share it with your friends and share the one that Kim has done with everybody that'll listen. So thanks a lot, everybody.
Thank you.
Thank you for listening to Make the Call with Dave Gallegos. Brought to you by Zenith Home Loans. If you enjoyed this episode, make sure to subscribe to the show anywhere you listen to podcasts and share the show with a friend or colleague who would also find value.